Hi everyone, and welcome to this special session where we're tackling some of the most persistent myths around stamp duty land tax. I'm Liz Jarvis, Managing Director at OneSearch, and over the next 30 minutes or so we're going to discuss some of the often heard stamp duty statements, misconceptions, old wives' tales and more. We're going to put them under the microscope, and I'm really delighted because joining me to separate the fact from the fiction is Richard Friend of 4Stamp. Richard, before we dive in, how often do you find yourself gently explaining that no, your cousin's client's WhatsApp group probably isn't the best source of SDLT guidance?
Hi Liz, yeah, it's one of those things I think with stamp duty that people often fall into the trap of a little knowledge, and if you have a little knowledge, actually it becomes dangerous because you feel confident, and actually, yeah, I've got something in the back of my head. I think this, that, the other. And I suppose that's where through, I don't know if you've played Chinese whispers as a child, maybe you still do, post Christmas, you played it at Christmas, I don't know. But those sorts of things where over time what you think is right or what might have some basis in fact actually becomes distorted. And yeah, quite often we deal with people who say to us, and solicitors and conveyancers who come back to us and say, "Oh, I didn't think about that," or "Didn't know that," and I'm sure we'll go through some of those shortly. So yes, it is a friend's WhatsApp group of someone who you met at the gym, who you speak with once a week. Probably isn't the best place to say it's in stone.
Definitely. Well, let's make a starter list then. These the kind of things that your conveyancing clients say about SDLT that make you pause and think, is that actually true? So let's go for the first one. If someone hasn't owned a home for 5 years, they count as a first time buyer again. Is that true?
Unfortunately, no. That's it's a myth. That's false. You're effectively you first time buyer is pretty much as it says. If it's the first time you're purchasing a property, then you're potentially again a sort of caveat that you're potentially eligible for first time buyers relief. If you haven't owned a home for a number of years, but you have in the past, then unfortunately you it doesn't reset. It's a one time only. So I'm afraid that's a myth. If you've owned a home previously, you don't qualify for that relief.
Qualify for it. Thank you. What about if somebody builds their own home from scratch? Is it true that they don't pay any stamp duty tax on the final value?
That's true. They won't. The person who they sell it to will. Yeah, stamp duty is calculated and based on the property or the land at the point of the transaction, the date of the transaction. So if you're purchasing a plot of land, you pay based on the value of that land. If you build a property or if you extend a property, then actually no, you don't pay SDLT to what you've done on that land. So essentially, you pay what's due on the purchase of the land at the point it's made. It doesn't matter if you then put a house on it, or you don't have to then subsequently pay SDLT on that.
Thanks. So here's an interesting one. People trying to wriggle out of, of having to pay stamp duty. So what about this one? Like where a client perhaps wants to buy a house and they're going to do it in their adult child's name. Is that a free way to avoid the 5% additional property surcharge?
Well, it depends. The challenge with that, yes, potentially the parent would avoid a 5% surcharge for an additional property. However, as we sort of just started off with, first time buyer relief is a one time use code, so to speak. So if you're using it to purchase a property by putting the property in a child's name, then at some point, potentially in the future, when that child wants to do their own property, they've used it up. So yeah, again, it's one of those where um, is it a myth? Well, it is and it isn't. So if I own a property and uh, I purchase another property through one of my children, I'm not purchasing that property. So it's true I've avoided the surcharge. However, my child, whether they thank me for it, or whether if it's their home they let me have that house or live in that house. I suppose it depends on how well they've got on over the festive period recently, doesn't it?
I like the idea though when you said that it's like a one-off um, credit that you get for that is for stamp duty as a first-time buyer. It's never again. So it's like you have this as a voucher, but it's a one-time thing. So be careful how you use it.
Yeah, and I suppose I don't know if this is a myth or is something you're going to bring up, but it's also worth noting that there's a number of circumstance where even though it's a one-time sort of use code, actually you're disqualified. You can't use it. And one of the I suppose more common. I think there's about 8 scenarios where actually you're not eligible. Um, but one of the I suppose more common ones is this notion that if you're buying a property jointly, then you're actually from an SDLT perspective, you're treated as a sole entity. So even though I might never have purchased property, if I'm buying my first home with a partner who has, then actually I don't get that relief. So there's again, it's worth taking advice. It's worth again. We have quite a number of clients who come to us, and one of the questions. I suppose we wouldn't appear on any Love Island or blind dates. Maybe that ages me. Sort of things where it's not quite do you really want to buy it together, but potentially from a tax perspective, if you're purchasing a property jointly, if either of you has ever had a property or had a stake in a property, then I'm afraid that first time buyer's relief doesn't apply. So it's just one of those things. It's not really in the case of true love, is it? Well, actually, have you bought a house before? But it's something to be aware of because potentially, as you say, it's a one-time code. But actually, if you're purchasing jointly as your first property purchase, then potentially, actually, it's a one-time code you can't use.
Hmm. That's interesting. Actually, you've answered that because that was one of the other myths there about joint purchase. So thanks very much for covering it there. What about this one then? So if a lawyer was to ask you, my client thinks that they can claim back the 5% SDLT surcharge if they sell their old house within 3 years. Truth or myth?
Well, that's the truth. So again, if you buy a main residence and you don't sell your previous main residence straight away, yes, there's the additional property surcharge. If you do then dispose of that prior residence within 3 years, then you can claim that 5% back. The point I suppose I would make on that is that prior residence has to have been your main residence. So again, we have people who come to us who might have additional properties or buy-to-let properties, and it's like, well, actually, it's not my main residence. I'm disposing of it. Again, it's things which we check out and look at it. But essentially, if you, for whatever reason, move home and you haven't been able to sell your home as part of that, or you've held on to it for whatever reason, then if you do that within 3 years, you can apply to HMRC and you will get that surcharge back. So that's the truth. So I don't know if that's the first positive we've had in this conversation. I'm not sure, but it's the first truth. Yes, you can get that back.
Brilliant. What about this one? This is a common one. That people thinking that transferring a house to their spouse is a gift. Is that always tax free?
No, depends. Maybe. Again, it's the this is the I suppose the beauty slash frustration of the complexity of the rules. If you were to offer it as a gift and there is no actual what they call chargeable consideration, then there's no SDLT due. However, if I were to gift something and there's a mortgage attached, then there potentially is SDLT payable on that. So it comes down to, in that scenario, um, just how much of a true sort of free gift it is, and if there is any sort of, say, mortgage or anything associated, then there is tax payable. So again, it's one of those where the answer is, I would say it's a myth. However, it's a depends, because in certain scenarios it's true. So again, it's a getting the details checked. I would suggest is, if you're in that scenario, very few of these tax positions are pure black and white. First time, I mean, we've already been through one of me. First time buyer. If I've never bought property, it's black and white. Well, it is, unless you're in one of these eight scenarios. In which case, it's grey. And the transferring as a gift is one of those areas where there is some grey.
What about this one? This one definitely sounds like something that somebody's heard in the grapevine. But buying a flat, a home over a shop counts as mixed use, and it can be cheaper. Is that one true? I thought it sounds a bit mythy, but I bet you it's not.
Well, it depends. If I were to ask a follow-up question, if I buy a flat above a shop, then that's a myth. If I buy a flat as part of a purchase that includes the shop, then it would qualify as mixed use. So, that would then effectively mean that there is a non-residential rate applied, and actually that would be potentially cheaper. However, the key thing on mixed use is that it has to be both sides of the equation, if that makes sense. For things with a flat above a shop, if you're buying the flat by itself, then you get these blocks of flats, don't you? On the bottom, you've got your convenience store. I'm afraid that's not going to qualify as mixed use. If it's your person who's buying the business and there's a flat above it, then that would qualify as mixed use. Again, the area where there's greyness, we get people who come to us and they are running a business from home. I'm going to convert the garage. It's going to be my it's going to be my physio room, what have you. Again, we can look into it. It's worth looking at, but again, it's fundamentally what is it you're purchasing at the date of the transaction. So if I'm buying a property that has an extension, or it has an annex, and I'm going to run my business from there, well, actually, if it was used residentially on the prior, the fact that you might have a future use for it, I'm afraid, again, we'll check it out, but the chances are that that's actually, I'm afraid, treated as residential. So it's by buying the two parts. So if you'd have said to me, um, uh, if I'm buying a small shop and I've got a flat I'm going to use above it, does that qualify as mixed use? Yes. Um, if I'm buying a flat above a shop, if it's just a flat, I'm afraid, no, it's not.
Right, no, that's good. That's definitely cleared that up. Um, Look at this one. The 14-day deadline to pay your stamp duty only starts when the client moves in. Is that true?
I'm afraid that's not so much a myth. Well, I suppose it's a myth, but I would say it's false. So the 14 days for the SDLT return is triggered from the date of the transaction. So on the date of the transaction, you have you have 14 days to lodge that. The day you move in is completely irrelevant.
Ah, right, okay. Um, Sticking with, I suppose, going back to that, talking about if you buy the shop and the flat together, like as a business, if somebody buys a property through a limited company, is it true that they pay less stamp duty tax?
That's a myth. That would be false. I suppose personally they might be paying less tax because the company are going to pay it. But I'm afraid that typically, if you're buying residential property through a limited company, the chances are the SDLT will be higher. Um, a company doesn't have first-time buyers relief, and actually, if that's sort of additional dwellings or additional properties, there's surcharges, and actually companies, I think since I think it's well a couple of years ago now, there's an additional surcharge for a company purchase. So no, that's a myth. The reason to purchase through a limited company rather than individual, there might well be benefits for doing so, but it wouldn't be a stamp duty reduction would be the driver to do that.
Right. I feel as if I'm really testing your knowledge here because these questions are all over the place. Like they're all different, um, coming from all different kind of areas of
That's
law.
right.
Which this one
I
is.
haven't had, I haven't had to phone a friend yet
Yeah.
or ask an audience. I think we're doing okay. I think
Yeah.
we're doing okay at the
We're doing
moment.
good to do it. I ask the audience. Um, so divorce settlements, another kind of branch of law here, but divorce settlements, is it true that they are exempt from stamp duty, land tax, SDLT, if they're ordered by a court?
Yep, that's generally, yeah, that's true. That's not a myth. If there is an order as part of a divorce settlement, then that is exempt of SDLT. Um, the HMRC don't get involved in that. So yeah, that's a truth. But it has to be part of that the sort of court sort of order settlement. It's not necessarily, again, you come back to the one bit earlier about a gift. If if it's all amicable and you say, well, actually, you have the house, I have this, again, that's not necessarily doesn't necessarily fall under this. But if it is part of the ending of a marriage or civil partnership, and there's sort of formal proceedings, then actually, yes, that's exempt from any SDLT charges.
Okay, thank you. So one lawyer has said that they heard that a client belief that the 0% threshold for stamp duty for first time buyers is still £425,000. Is it still that?
Afraid, no, that's false. So I think it was due to COVID, or either just after or during COVID, there was additional support given for first-time buyers, and I think that was extended. But since last year, some point last year, that actually was the additional support was removed, and so I think first-time buyers, I think it's 0% for 300,000, which goes back to I think the pre-COVID levels, but certainly the enhancement that has been there for first-time buyers was removed at some point during 2025. I think it might have been from March, April time. But no, the 425,000, I'm afraid, you don't get all of that exempt anymore. It's 300,000.
Yeah, no, I remember that had come round again, just in the kind of springtime last year when, as you say, it was measures that were put in through the pandemic, and then they were indeed extended, but withdrawn kind of the end of March last year. So here's another one. My Dubai-based client, this Dubai, we're pushing you a wee bit here. So this person's got a UK passport and thinks that the 2% non-resident stamp duty surcharge won't apply to them because they live out in Dubai. Is that true?
I'm afraid that's false. That's another myth. So what we have with stamp duty and with some of the other taxes is actually being sort of a resident isn't actually linked or treated as a national, isn't actually linked to your actual nationality. It's about residency. So actually, you have to qualify as a UK resident. It's about residency, not of nationality. So if you are resident for 183 days in a country in a 12-month period, either the 12 months prior to or post, which is an interesting piece, I'll come on to in a second, then you qualify for then you avoid the 2% surcharge. So, for example, we dealt in January last year with a footballer who had signed for a Premiership team, come over from Europe. There's a 2% surcharge, and they weren't sold straight. They weren't sold. They're still in the UK. And actually, in, I don't know, 183 days, when's that? Sometime in June or July. Actually, they've been in the country for 183 days. So you can actually, once you are in the country, you can apply and get that surcharge repaid. So you can get it back because it's 12 months prior or post the date of the purchase. So similar to the selling of your previous main residence, it's a surcharge that you have to pay, but in certain circumstance you can actually get that back when you effectively meet the criteria post transaction.
Richard, there doesn't seem to be anything that you do not know about stamp duty. You're just something.
Well, the good news is I'm actually not one of our qualified tax guys. So this is why of everything it's worth getting it checked properly. It's worth doing it properly. But in terms of sort of myths and truths, I don't think I've actually quoted any numbers, which is good for me. But yeah, I mean these are sort of things that we come across pretty regularly.
I wonder if I can maybe ask you one last one. A client believes that their property that's got a granny annex still qualifies for multiple dwellings relief. Is that right?
Well, I would ask a question back, which is it in Wales? Because if it's in Wales, the answer is yes, it still qualifies. So the multiple dwellings relief was removed. I think it's the 1st of June. I think it might be, because we've just gone into the new year, so I think it's 2024, I think. But it's multiple dwellings was removed in England, so the sort of the granny flat, the annexes, where you could, depending on the calculation, you could reduce the amount of SDLT. That's been removed. However, I think it's under consultation in Wales, but as of the date of this recording, multiple dwellings relief is still available in Wales, but not in England. The caveat to that is that in England, if you are, as part of your purchase, there are 6 or more properties. So if you're buying I'll say multiple flats, then there is still a relief which is called the rule of 6. So there is sort of multiple dwellings relief is still available for multiple purchases of 6 or more, but for the sort of the houses that have a sort of converted garage into a separate annex, if you're in England, then I'm afraid that relief's been removed. So that's a myth in England now, unless you're buying more than 6. If you're in Wales, then at the moment you can still take advantage of that.
Well, thank you. And that was our last stamp duty myth busted. I'm sure that there's others that will come to mind for people as they're watching it, and if you need any other questions answered, whether it's on calculations, reliefs or compliance, then our team is here to help you on it. A huge thanks to you, Richard, for joining us. And for more details on 4Stamp via the OneSearch platform, then just click on the link in this description. Thanks very much indeed for joining us.
Thank you. Thank you for the questions.